start this week not with a euro dollar, but with a dollar yen, because I think the yen story is kind of very, very interesting here. This is just a 30-minute chart, very, very tight close-up of the yen action. The NFP, of course, changed the yen move here quite significantly from 70.50 to about 78.80, but have not been able to really push us all the way up to 79. So let's peel back on a much longer time frame. Let's go back 6 months. Take a look at this on the dailies, just to see how the structure is shaping up. Because one of the key things that I'm thinking technically that's happening right now is we are setting up a very, very long-term bottom here. We're still very much under pressure to really clear this in any meaningful way. The first clear is sort of this resistance 79.25. The next one is 79.50. To me, this is really the really important clear that needs to happen in order for a dollar yen to turn into a much more bullish posture. And then, of course, obviously, the really big magnetic number is this 80 to 85 to 80.50 level, which is a very, very important level to clear. That's quite a lot of overhead resistance, as we can see from right now. But having made 1, 2, 3, 4 bottoms here, and have kind of really held ground with this little, except for this little dip here at 77.50. And having seen the RSI now slowly start to build above the 50 level, it does give me some confidence that we may be seeing a turn in dollar yen, and in that effect, actually probably all the other yen pairs. We can take a look at we can look at the whole yen complex here. Let's take a look at the euro yen, and we see the same kind of situation. The euro yen actually looking even healthier as we make some nice big rounded corner here, the 103 here in the euro yen, and let's take a look at the pound yen as well. To see how the yen complex here is actually looking much better. As you can see, actually, by the way, the yen crosses look much healthier, technically, in some ways, than the dollar yen itself. But the fact that dollar yen is in a possible bottoming formation and looking to break its way out, I think is very interesting. You saw my commentary on CNBC this Friday where I said I like to be a buyer at 7,900 because that would convince me that at least we have the right direction here on the up move, and with the thesis being that if you can basically go through 7,900 and hold the 77.50, in other words, hold this support level, then the path of least resistance is to the upside. We probably see hopefully 80, maybe 80.50, and ultimately if we pull back a little bit longer. We go back a little bit longer on the yearlies. Really, the big level of resistance here is this 81, 82 level, and ultimately the 84 level spike of at the beginning of the year. But looking at the dollar yen complex and just the dollar yen pair itself, you definitely see a plateauing, a bottoming out formation. Now the key thing is, can we break through to the upside? Can this bottoming out really finally put ourselves into a turn trade, which is really what I think could be happening in dollar yen. That's why I wanted to start with it, because I think it's one of the more interesting trades here as we're looking at the FX market on a longer term basis. Euro longer term basis looks pretty healthy, actually. If we peel back, there is a lot of resistance here. One of the reasons why I don't like, I'm cautious about really getting very, very wildly bullish euro here is if you look at the technicals here, there's a lot of resistance to this 34th 30,100 level. This whole zone is a pretty heavy level of resistance. And as a matter of fact, what you're seeing here is, I'm going to peel in here a little bit, is a possibility of a lower high. Now this is actually going to be a very, very critical, let me just get rid of this stuff, very critical juncture here for euro dollar, because in order for us to really establish even a modicum of, I think, a bullish bias, we really need to break this 31.50. This is a key level that I think a lot of people are focusing on. If we can't break the 31.50, then what we have effectively is a whole set of lower lows, and that is kind of negative for the pair. So if we sort of fail over here at 31.50, cannot make it, or make a double top at 31.50, then it looks like it's going to be much more distribution than accumulation in the euro dollar. For the time being, I'm neutral. I don't really have a good judgment call on whether it goes up or down. 31.50 level is really going to have to be the one where it's going to be a make or break situation. So we'll be watching this level in the week to come and see if we can clear it around here, or if we start to fail around these levels. So that's euro. Let's take a look at the pound, which looks distributive to me. I mean, what you're basically seeing here is a double top at the 6,300 level on the dailies. It's been weaker than the euro, certainly over the last few days. And this turn in risk on Friday, in many ways, I think is somewhat negative. Pound, of course, is just a very, very tough pair to trade because remember, almost every move is the opposite. It's like the George Costanza of currency pairs, where everything that looks like it's going to go up, the next day is going to turn down. Everything that looks like it's going to turn down looks like the next day is going to go up. But if you sort of take a look at the pound on a more longer-term basis, it is clear that we definitely have the double top of the 63, and until and unless 63 breaks, you really have to operate on the assumption that it's turning lower. Furthermore, when you're looking at the RSIs and you're looking at the momentum, clearly momentum has turned lower. RSI breaking below the 50 level would be very bearish to me. It would indicate to us that maybe momentum to the downside is accelerating. So we have to watch this 6100 level again. It broke earlier in the week, came back up. Let's see how we trade here in the 61s. And ultimately, really, the really big level is, of course, the 60 level, because that's a big psychological level. Break the 60 level, then pound really has no support until 59s, and really no real serious support till the 57s. So whether we have a double top in formation will probably give us a very good clue once we break into the 6100s. And really, I think on a let's go onto the hourly charts just to give ourselves a little more granularity here. Really, until we break the 60-50 levels, that to me would be the really interesting, the 60-50 level. You see how on the hourly charts, the 60-50 level is really nice support. We haven't been able to come down below that. This breaks to the downside, 60-50 level. You have a lot more confidence that indeed a double top is in place, and we're going to be heading all the way down to possibly 59s. So I want to be watching the pounds at 60.50. I want to be watching euro at 31.50, and certainly want to see the yen at 7,900 to see if we can break to the upside as far as the majors go. That's pretty much how the week is shaping up. We've had a lot of fireworks last week. I still think that hopefully we broke through a lot of the low volatility, grinding, mind-numbingly boring markets of last week, and hopefully we get a lot more volatility expansion this week and get to see some nice ranges. So if we get movement, there's really going to be interesting opportunities once we hit key levels, both in the pound, in the euro, and most importantly in the yen, as we watch all the yen crosses. Looks like it maybe is dollars for the taking, so we'll see how it goes out this week. Anyways, wishing you guys the best of luck, the best of trading. We'll see you as always. This is Boris Schlossberg, over and out.